Welcome back, Adam here, and today I've got something for all of the landlords out there, anybody who has property income and needs to report that to HMRC. I'm going to show you a really straightforward way to complete the property pages of your self-assessment tax return to make it as easy as possible, rather than using HMRC's government gateway, which isn't exactly user-friendly. I'm going to use a piece of software today called GoSimpleTax, or GST, which you can all access in your browser without having to download anything. Before we get into it today, don't forget to like the video and subscribe to the channel for more helpful tax content. I'm also going to link down below to the GoSimpleTax page so you can access the exact same software that I'm using here today. You'll just need an email address, a UTR number, and your basic contact information to get yourself signed up. Before we do jump across and start looking at the software and the entries that you'll need to make, these are the figures on screen now that I'll be declaring to HMRC in our example. You can see I've got 3 different properties, all of which are treated differently for tax purposes. Property 1 that I would consider a normal rental property. Property 2, which is the house that I live in, but I'm renting a room in that house and therefore qualify for rent-a-room relief. Don't worry too much about the qualifying criteria at this point. The software actually gives you some really good tips and guidance as you go along. And then we've got property 3, which is a furnished holiday let. You can see that I've got income and I've got expenditure for each property, and really this is the point that you would need to get yourself to in order to complete your tax return. You need to have gathered together details of your property income and all of the related expenditure. Now let's switch across and start by looking at the interface so you can see how easy this is going to be to use. I've logged on here to run through our example, and you can see here in the top left that I've landed on my 21-22 tax return, which was from the previous year, as now we want to be looking at the 22-23 tax year, which runs or ends on the 5th of April 2023 and can usually be submitted online between now and the 31st of January 2024 before any penalties would start to be applied. Before we move on to the correct tax year, you can see here how straightforward this is going to be to use. On the left hand side, I have my different types of income. I have investments, I have UK property, I have employment income. You can add different sections of the return here, and of course you can remove sections as well if they don't apply anymore. The main reason that I'm actually pointing this out is because if you're used to using HMRC's government gateway, you'll have to answer a bunch of questions about income that you didn't even have. With this software, with GST, it's much more tailored to your situation. You're just going to be telling it what income you did have rather than telling it what income you didn't have as well. So let's begin by rolling forward the tax year to the 22-23 tax year, which is the one I actually want to submit. I can do that by clicking on change up in the top left and then choosing from the available tax years that we have here, and I'll click on switch to move through to the 22-23 tax year. What's really cool about this software is that once you start using it, it's going to remember when you roll forward what type of income you had, and it will automatically start you in the new tax year with the same income that you had, or the same setup that you had in the previous year. Of course, you can remove a section, you can add a section if you need to, but for most people, if you have property income in one year, you're very likely to then have the same property and same property income in the following year as well, so it will actually save you a little bit of time getting set up. For this example, I've actually cleared out my return here, so we're starting completely from scratch. If I then click on new page, you can then choose from all the different sections of the self-assessment tax return. You've got employment income in here, investment income, self-employment, and then towards the bottom of the page, you can then see the property sections here. I'm going to start by adding the correct section for my property 1 on the spreadsheet that I showed you, which will fall under UK property. Now, this is what I would call a normal rental property. You know, the most common example of this would be a residential property let on a 6-month tenancy agreement, and that's what my example applies to here. You can then see that you're presented with the tailoring your return section, tailoring questions that relate to this particular section of the tax return. The property name or address at the top is only for your reference. This isn't actually something that gets submitted across to HMRC, so I'm just going to put in property 1 here, and if you click on the question mark, it's going to tell you that this will identify your rental property is not submitted to HMRC, so it lets you know when that is the case. We've then got the number of properties being rented out. Now, you won't actually need to break down the income and all the expenses for every single property if you don't want to. If you've got multiple properties, you might find it easier just to provide an overall figure, but you will need to detail how many properties of this type you have in total. Of course, in this example, I'm going to leave it as 1. Is this a furnished residential letting? A furnished residential let is different to a furnished holiday let. Don't get the two of these confused, but usually if you let a property with furniture, you should then be able to claim the expenditure of replacing that furniture as an allowable expense, although most of the time they're not going to let you claim the original purchase of it. Is the property let jointly? You'll see this question come up a lot under the property sections. If you let a property jointly with one or possibly with more people, then it's only your share of the income and the expenses that get reported, and that will be detailed here if I click on the question mark. So you only actually need to report your share of income and expenses on the tax return, and your share will normally be based on the percentage of the property that you legally own. There are slightly different rules for spouses and for civil partners, where property is considered to be owned 50-50, irrelevant of how much you actually contributed or what the deeds legally say. There is, however, if you are married or in a civil partnership, a declaration that you can make to HMRC to realign the beneficial ownership, it's called, and you can realign it back to your actual legal interest. But again, that's only if you're married or in a civil partnership. Do you expect to receive income from this property in the next tax year? They just want to know if they should be expecting income under this section next year or not. If you say no, then they won't be surprised when you put 0 in this section next year. If you say yes, and then you report 0 income next year, then it could potentially flag with HMRC that something is wrong and possibly that it needs investigating. Losses from previous tax years. Now, these can be offset against future gains of the same type. It's really important that if you make a property loss, you first of all declare it, and second of all, you need to then roll it forward until it's been utilised, and you do that in part by entering the loss each year here. HMRC like to be able to track your loss from when it's actually incurred all the way through to when it's utilised. So if you incur a loss this year, then you forget to roll it forward and you don't do anything with it, then in 10 years time you finally want to utilise that loss, HMRC won't really know where it came from because you didn't roll it forward. Whereas if it's actually been rolled forward, then they can go and trace it all the way back. Do you have a property manager? I'm going to say no to this as I look after the property myself, and I think that one's pretty self-explanatory. And the last one on the page is, have you calculated your income and expenses on the cash basis? Again, make sure you use the question mark to the right hand side because you're given an explanation of what these trickier questions actually mean in plain English. And it says the cash basis means you only need to declare money when it comes in and out of your property business. At the end of the tax year, you won't have to pay income tax on money you didn't receive in the tax year. The best example of how this actually works would be if you had a tenant at the end of a tax year who's 3 months behind on their rent. Under the cash basis, you don't need to include that income, those 3 months, in your calculation, as you haven't actually received the money. If you use the other option, which is often called the traditional basis, traditional accounting or accruals basis, then you would still need to include that income and potentially pay tax on it, even though you haven't had that money yet. So the cash basis is a simplified way of accounting, although it does actually come with a couple of restrictions, such as you can only use it if your turnover is 150,000 or less. Now, once you finish tailoring that section, actually entering your income and your expenses, all your details, couldn't really be easier. You've got a green section at the top to add your income to, and you've got an orange section at the bottom to add your expenditure to. Now I'm gonna start by clicking on the green plus sign to add income on the right hand side here, and then I get to choose from this list of reporting categories. Now this might look a little bit daunting, as technically there are all these different types of income that you might receive from property that would fall under this section of the tax return, but your average landlord will just be receiving rent from a tenant, and that's the case in my example as well. So the only one that I'm actually interested in is the second from the top here, rental income received, and then below that I'm given a box to enter the amount of income. Now we've been given another question mark with a bit of guidance which says, in the amount field, you can either declare the total sum of the items in this category or add an amount per item if you prefer not to do the calculations yourself. So again, if I had 10 properties, I could add them all one by one here. Property 1, enter the income, then move on to property 2, enter the income, property 3, etc, etc. The system would then add all of that together for you. But if you've already done that piece of work yourself, then you could also just provide the amount as a single figure here. So perhaps you would change your description to properties 1 to 10, or property business combined, and then enter the combined total in here, whichever you prefer. The end result in terms of the numbers will be exactly the same. In my case, I only have the one property anyway, so I'm going to enter my gross rent received for the year in that top box. Then we have tax withheld as a non-resident landlord. If you live in the UK permanently, then this shouldn't apply to you, but just for a little bit of background, if you have a rental income or rental property in the UK, but you're not resident, i.e. you live overseas, then the tenant of that property, or sometimes the agent if they look after it, will have to withhold tax when they pay their rent across to you. And that's what they're asking about here. Of course, in my situation, this doesn't apply, and again, it won't apply if you are a permanent UK resident. Below that, you then have the option to add files to support your income. Could be your calculation that we saw earlier, it could be your bank statements, it could be rental receipts that you get from an agent. This is not something that actually gets sent across to HMRC, this is for your records. So if you use this effectively, this software will take care of all your record keeping as well. Remember, you need to keep records, accounting records, for a number of years following your submission, depending on the type of income that you're submitting, the reason that you're submitting. So doing that can be difficult if you keep everything in paper form. So using this tool can be really helpful for that. And I'm going to save that section. You can now see my income breakdown under the green header here. In this case, I only have property 1, but if you did have multiple properties, they could be listed out here and they would all show. Next up, we can then move on to entering the expenses for property 1 by clicking on the add group or the plus sign under the orange section or next to the orange section. You'll notice it says add group. So by clicking on this, I can then choose which expense groups are relevant to me. In the case of property 1, I have insurance, I have some repairs, and I have renewals, and I have mortgage interest as well. So I'm going to tick those 3 and then save. You can then use the add button or the plus button to provide detail, or if you need to remove a category, on the left hand side here you have the delete function as well. Each group of expenses will then have categories within it, like sub expenses within it, so you can choose whichever of these fits best for your scenario. In this case I'm looking at insurance. The description again is for your reference, but if you don't put anything in here it will default back to the category setting. I don't have an asterisk here, you can see that, which means that it's actually optional. The one compulsory entry though is the amount, which I'll need to enter here. So for insurance I have £1,000 to enter from our example. Now if I was using this for record keeping as well, then I could do this item by item. So maybe if I had 2 insurance policies at £500 each, I would add them one at a time and then add a copy of the invoice or the insurance policy here, and that would help me maintain my record keeping, or to meet my record keeping obligations, which of course is going to be very useful if HMRC were to ever investigate and they wanted to see any evidence. It's all going to be here electronically for myself or for HMRC to access. There'd be no need to go hunting through loads of paperwork. At the bottom, what you're going to see is a tool that we actually haven't seen yet, because it will only appear when entering expenses. This is a handy tool for private use adjustments. Now, private use adjustments aren't an exact science, but they are really important. So if I had lived in this property for say 3 months of the year before I actually let it out and benefited from this insurance policy, then I would want to adjust for my private use and say, well, actually 25% of this was for me, it was private. And I can do that by either sliding the scale up here, or you can manually write in your 25%. By doing this, this will actually disallow 25% of that £1,000. And if I save, you can actually see here, that's exactly what it's done. So it's only allowing £750 of those insurance costs. Now I can work through and add details of my mortgage interest. Again, you'll just be choosing the entry that looks appropriate for your expense. Description isn't compulsory here, so I'm going to leave it as the standard. The top box, non-residential or commercial property finance costs. So if you owned a commercial property and received rental for it, your financing costs would go in this box, along with any private use adjustment for that. And on this page is a good example. You can actually see next to the description, it's actually giving you the box on the tax return that the entry is going to be recorded in. So if you're more used to recording your information on paper tax returns, then you could actually true this back or tie it back to the corresponding entries. Below that, we've then got residential property finance costs, which go in box 44. A few years ago this changed, and if you've been a landlord for a while you'll be aware of this, because it wasn't, or it isn't, very popular. In the past, you were able to claim 100% of residential finance costs as an allowable expense for your property business, which was very simple. They then started to phase that out over time, so now you're not actually able to claim any of these costs as an allowable expense, but it's still really important to enter that information here. Essentially, instead of getting straight tax relief as an expense, you will usually get a tax reducer at the basic rate of tax instead. So if at the end of the property section, my tax liability is £2,000, but I've entered my £5,000 of residential property finance costs in here, then HMRC would reduce my tax bill by 20% of the £5,000 mortgage interest. So instead of paying £2,000, I'd end up paying £1,000. This can be a little bit tricky to get your head around, but essentially you still need to enter details of your mortgage interest here, and GST will then make sure that it's recorded correctly and you get the appropriate reduction. and I'll save that. The final expense for me to now enter is for repairs on property 1. So I'm going to click on add, and then I'm going to select the most appropriate category. If you can't find a suitable category, you will always have an other section. So here it's other repairs or maintenance, and you'll find that under each category or each section. I'm going to go ahead and enter the whole figure, which was £2,000, rather than doing this expense by expense. I'm not going to adjust for private use, and I won't attach any files, as we already know how those sections work. And I'll save that to complete the UK property income section for my property 1. Before we do move on to properties 2 and 3, which will be much quicker to run through now that we understand how the system works, I'll just point out, if at any point you felt that you had answered one of those tailoring questions incorrectly, or you need to adjust your answer for any reason, you can do that by clicking on Edit at the top here, and you'll see those questions will reappear. You can amend them and then save down your revised answers. I'll also point out that this tax calculation here on the left hand side, this is a live calculation. You won't necessarily need to wait until the end of your return to see how much of a tax liability you're building up. As you add information, this figure is going to update. In this case, I've only got about £2,250 of property profits, which is going to be covered by my personal allowance, so it's reading 0 at the moment. But as I add more income, you're going to see that figure update. My second type of property income to declare qualifies for rent-a-room allowance. And I'll record this by selecting rent-a-room from here. I can then provide details from my spreadsheet. This was property 2. In my case, the property was not let jointly, but if it was, I would make that declaration here. I would also then only enter my share of income and expenses, and any allowances that I get would be split between the number of owners of that property. And then I'm asked, do I want to claim the annual rent-a-room allowance? Now this allowance is £7,500, and it applies when you let a furnished room in your own home. There are a few conditions, such as the room has to be furnished, you can't let to a business, and it can't be self-contained. So you would need to share some facilities with them, such as a bathroom or a kitchen. You're also not allowed to create a loss when using this allowance. It can potentially be used by a trading business as well, such as a bed and breakfast. So this is a really powerful allowance, given that it's £7,500. I'm going to say yes, because I'm happy that I've read through the guidance and I want to claim it. However, there are certain situations where it's better not to claim this allowance, like when you have high amounts of expenditure or where you want to create that loss for your property business. But in my example, I'm happy, so I'm going to save and continue. Now, the software has generated some guidance here on when you might want to claim rent-a-room relief. So it's always worth reading anything that is presented in front of you, as the software, GST, will guide you in the right direction, which might work out cheaper than paying an accountant for advice. Now, again, it's going to be a case of following through the process. So I'll go to the income section and find an appropriate section. I received rent, so I'll select that category, of £12,000. I'm going to save this. When it comes to these expenses, in most cases, this will be what decides whether you claim rent-a-room relief or not, the level of your expenses. Again, try to choose a category here that fits your expense type. I'll go with services, which covers cleaning, and I'll save that one down. Essentially, the way rent-a-room relief works is the allowance would replace your expenses. So if I had £8,000 of expenses here, then why would I want to replace that £8,000 with a £7,500 allowance? It wouldn't make any sense. I would end up paying more tax. But in my example, I only have £2,000 of cleaning expenses, so I'll enter that here, £2,000, and save. So I've entered my expenses here as 2,000, but that's more for my own records really, because I ticked that box when I was tailoring this section. I ticked the box to claim the annual rental room allowance, which is £7,500, because I'm not letting the property with anyone else. So it's actually going to replace the 2,000 with a 7,500 of rental room allowance. The final section that I'll need to add is for property 3, which is my furnished holiday let. Again, there are criteria that you'll need to meet in order to be classified as a furnished holiday let, which will include making the property commercially available for 210 days or more, and actually letting it commercially for more than 105 days or 105 days or more. There are some significant benefits to this though. So the main one, primarily the fact that mortgage interest and financing costs become an allowable expense again, which can be very valuable. Remember when we looked at property 1, mortgage interest wasn't actually an allowable expense. I am happy that my example meets the criteria, so I'm going to go ahead and select that it's a furnished holiday let. And then following the same format as before with the tailoring questions, we need to enter a name, which for me will be property 3. We then have a couple of questions about where the property is located. Specifically, they want to know if it's located in the EEA, the European Economic Area, and you can click on the question mark here, get a list of countries that make up the EEA, so you can work through this to see if it would apply to you. If your property or properties are located in the EEA and still qualify as furnished holiday lets, then they will usually need to be treated separately from your UK furnished holiday let. So you might have 2 properties in the UK which make up your UK furnished holiday let business, and you might have 2 properties in the EEA which make up your EEA furnished holiday let business, and you would have to treat the 2 of those separately. They are separate businesses and you can't combine them under this section here. My property is in the UK, so I'm going to answer no to both of these questions. I'm then asked if I want to make a period of grace election, and again you got a bit of guidance here. Now this applies where you met the criteria to be classified as a furnished holiday let last year, but you didn't meet the criteria this year. So maybe you didn't let it for enough days. So this would allow you to continue to enjoy those benefits in that scenario. As you can imagine, during COVID, there would have been a lot of landlords making period of grace elections as they weren't able to rent out their properties. I'm not going to make any adjustments for private use, and I don't have any balancing charges. Balancing charges relate to the disposal of assets that you hold in your property business. It's just the one property that I've let out, so I'll leave that detailed here. And there's again no private use adjustment. The property is not let jointly. Do I expect to receive income from this property? Yes, I do. There is no property manager, so I'll leave that one marked as no. Have I calculated my income and expenses on the cash basis? No. And then the last question, we actually have seen all of these questions before under the other sections, but the last question hasn't come up before. Would you like to summarize your expenses in box 9 of the tax return? So certain sections of the tax return, or certain sections of the property returns anyway, will allow you to provide your expense total as a single figure rather than breaking it down by category, but not every single section. In this case, we've already been through how to break it down by category, so I'm going to provide a single figure here. I'll select yes and go with single figure and save. Now, when declaring my income, again, I'm going to select rental income received, and I have 20,000 of rental income, which I'll declare here. I haven't had any tax deducted by a letting agent, otherwise it would be detailed on the rental statements that you get through, and in my case I didn't have a letting agent. Remember to attach your backup if you have any, just for your own reference. And now you should be able to see that the live tax figure has kicked in, it's updated. My taxable income has exceeded the personal allowance. So as it stands, if I submitted these figures as they are, then I would have £2,836 to pay to HMRC by the end of January 2024. This figure is still going to change. I have some additional income that I need to enter, but this time it comes from cleaning of the properties, and it's only £1,000 that I'm going to enter in here. What you can see though, again, is that my live tax figure has updated. Luckily though, it should now decrease as I need to enter some expenses. Now remember, I've selected in here that I want to provide a single figure for my expenses. So as I come back to this, I will add a group of expenses and I can pretty much select any of these. So I'll save that one and add. And although you're presented with these different options, it would be a little bit pointless to then break it down by category, because when the return goes across, it's all going to go across as one figure. You can still do it for your records, of course, if that's easier. But in my case, I know that I have £8,000 of expenses in total, and rather than breaking them out by category, I'm just going to put the one figure in there because that's how they're going to go across to HMRC anyway. And that is my furnished holiday let income declared. You can see here I've got property 1, property 2 and property 3 all declared on the tax return. My live tax figure has also updated, so I now owe HMRC £1,436. You would expect it to have decreased like it has, because I just added in some expenditure. Now from here, of course, everyone's situation is different. You might then need to go and add details of your employment or maybe your self-employment, but as I'm sure you've gathered by now, the format is going to be the same. You're going to be answering some tailoring questions using the additional guidance that the software gives you, and then you're going to be presented with an income and expenditure layout, just like this one, for any section that you have, and you'll need to break down your income and expenditure accordingly. So as you can see, the whole system is designed to be really user-friendly, and it works very well. In my example, I'm actually happy that my return is now complete. So in order to move on and submit the return, I can click on Save and Continue at the top. Now, when you do that, GST will run a quick check on the information that you've provided to make sure that nothing's been missed and it's all in the correct format. You can see here that it is flagging an alert for me. There's something that I need to go and look at, and in yellow it's directing me to the UK property section, property 1 at the top. There's obviously something going on that it needs to bring my attention to. If you click on that section again and then you try to save and continue one more time, it will actually point you to the exact section that you need to look in. So if I click in mortgage interest here, this isn't so much of an error, but what it's pointing me to is the fact that I've said I've got property finance cost, but I put 0 in this box. Now that's fine for me. In my situation, I know I'm happy with that. That should be 0 because all my property finance costs relate to residential property. So this is more just pointing out where there could be errors in the return. So I'm actually happy to save that and ignore it. If you weren't happy, if you weren't sure what it was directing you to, what you could do is take a screenshot, and in the bottom left hand corner you've got some articles here which would potentially give you some answers, but also you've got email support, so you can get in contact with GST and someone in the team will look into it for you. If the team are online, then there'll actually be a chat function in here as well, so you can always use that one. But like I say, I'm happy, so in that case what I would do is save and continue, but this time where it says are you ready to file, I would click yes, and it will actually overwrite that and move forward to the next page. Now this page contains all of the standard questions on the tax return that everybody has to answer. Unfortunately, I can't tell you exactly how to answer these, as the answers will be different for everyone, but most of them are pretty straightforward, like confirming your address and your national insurance number, so you should be able to work through these. I will, however, just give a bit of narrative to a couple of these. Firstly, at the top, are you submitting an amended tax return for the 22-23 tax year? please only tick amended if you are making changes to your tax return you have already submitted. So this would only apply if you have already submitted your 22-23 tax return and you now wanted to submit an updated version. Maybe you got a number wrong, maybe you forgot to include some income. But if this is your first time submitting the 22-23 tax return, it will not apply. You've then got one that says, are you claiming to reduce your 23-24 payments on account? So that's next year's return or next year's payments on account. Payments on account apply when you have a tax liability in excess of £1,000, or if you didn't have 80% or more of your tax liability collected at source. For example, if it were collected through PAYE, you'll have to make one payment by the end of January and one payment by the end of July. These are payments towards the following tax year's liability, and each payment is 50% of this year's liability. I'll show you an example in a second because my liability was more than £1,000. The idea is that by the time you get to next January, you will have already paid your tax bill, or most of it, maybe a little bit over, maybe a little bit under. This catches a lot of people out though, especially in their first year of completing a tax return, and especially if you're self-employed as well. A lot of people won't be expecting this. By selecting yes here, you would then be given the chance to overwrite that figure. So am I claiming to make payments, reduce my payments on account? Yes. You're given a chance to amend your payment on account, but you would need to give a reason. For example, in my case, if I knew that I was refurbing my holiday let next year, my income was going to drop drastically, I might be able to reduce my payments on account by giving that detail and then changing the amount to a lower figure. Because at the moment, it's going to want half of my £1,400 liability as a payment on account in January and then half again in July. I'll leave that as no to show you how this works. At the bottom of the page, you do also have a chance to attach returns, attach documents to the return and add narrative. Anything that you attach here under this section will be sent to HMRC. It's not like the other sections, so anything added here will go across to HMRC along with your return. I can then scroll back to the top and then I can review my calculation and proceed, which is where you're going to be able to actually submit your tax return. You should be able to see here that I have a tax liability of £1,436. I don't have any national insurance applying here. National insurance doesn't apply to property income, it's to earned income, like your employment income or self-employed income. I haven't had any tax deducted, any tax paid at source, and I haven't made any payments on account. So my balance for the 22-23 tax year is £1,436. But you can then see that I'm having to make payments on account towards the following year, which is what I was expecting to happen. So you've got another £718 to be paid by January, meaning the total to be paid by the 31st of January is £2,154 and another £718 by the 31st of July. At the bottom of the page, I can then download a copy of the full tax return or an SA302, which is a summary of earnings. Really useful if you need to prove your earnings, for example, for a mortgage application. Now, I won't actually go any further than this, but the next step is to verify your identity, which you can do by having a code text to your phone, and then to actually submit the tax return. It really is that simple. That is all for today. I hope you found that useful and you are now confident to complete the property pages of the self-assessment tax return using GoSimpleTax, which I've linked to down below. If you have any questions, drop them down in the comments. Thank you as always for watching. See you next time.